July 11, 2025, this day is destined to be recorded in the history of the crypto market. Today, the market did not give us any breathing space, and directly announced the arrival of a new round of market with a new historical high. This is no longer a simple price rise or fall. We are witnessing a profound structural change led by institutions and enterprises. Today's news is complicated, with exciting technological breakthroughs and the pain of track reshuffle. Below, I will unravel the mystery for you and deeply interpret the core information that is really worth your attention today. The absolute protagonist of the market today is undoubtedly Bitcoin. In the early hours of the morning, the price of Bitcoin soared like a rocket, breaking through $118,000 in one fell swoop, reaching a high of nearly $119,000, setting a new historical record. Accompanying this breakthrough is that more than $1 billion of short positions were ruthlessly liquidated by the market within 24 hours. Why is this breakthrough so important? For investors, it is not just a price number. This breakthrough was completed after the approval of the spot ETF and was continuously driven by real money and silver institutional funds. On Thursday alone, the U.S. spot Bitcoin ETF attracted as much as $1.2 billion in funds, the second highest single-day net inflow since its inception. Among them, the IBIT fund of asset management giant BlackRock became the fastest ETF in history to break through the $80 billion asset management scale. This clearly shows that Bitcoin is transforming from a high-risk speculative product to an indispensable part of global institutional asset allocation, and its digital gold narrative is being accepted and verified by the mainstream financial world. In addition to ETFs, the most noteworthy trend in the market today is the full blossoming of the corporate Bitcoin vault strategy. This may have a more far-reaching significance for the long-term value support of Bitcoin than short-term price fluctuations. From technology companies to food giants, this wave has surpassed the technology or financial fields we are familiar with. One of the most important news today is that DDC Enterprise, an Asian food giant listed on the New York Stock Exchange, announced a partnership with Web3 giant Animoca Brands. Animoca will provide DDC with up to $100 million in Bitcoin to support its vault strategy. The signal behind this is that even the most traditional food consumption industry has begun to regard Bitcoin as a pure monetary asset for strategic reserves. This has greatly broadened the boundaries of Bitcoin adoption. At the same time, European companies are also aggressively increasing their holdings. A British company called the Smarter Web Company has seen its stock price soar by more than 13,000% since it began implementing the Bitcoin Vault strategy in April this year. Just today, they announced the purchase of 275 Bitcoins, bringing their total holdings to 1,275. This aggressive buying behavior is creating a new and continuous buying demand for Bitcoin. When listed companies in different industries and countries begin to use Bitcoin as a reserve asset similar to gold, the demand structure of Bitcoin has undergone a fundamental change. It no longer relies solely on the emotions of retail investors, but has more stable and visionary corporate buyers as support. The map of the crypto world is being reshaped. While Bitcoin is advancing by leaps and bounds, the Ethereum ecosystem has also staged a wonderful song of ice and fire, with both the carnival of technology and capital, as well as the reshuffle and pain of specific tracks. Ethereum prices returned strongly today, re-entering the $3,000 mark for the first time in 5 months. BlackRock Spot Ethereum ETF, ETH, set a record high of $300.9 million in a single day of net inflows. This shows that after Bitcoin opens up room for growth, capital is looking for the next value trough, and Ethereum is undoubtedly the first choice. Like Bitcoin, companies have also begun to directly configure Ethereum. Nasdaq-listed SharpLink Gaming announced that it has purchased 10,000 ETH directly from the Ethereum Foundation, making its treasury value more than $558 million. The symbolic significance of this transaction directly from the official is self-evident. What excited the core technology faction the most today was that the Ethereum Foundation announced a major plan to integrate zero-knowledge proof (ZK proofs) technology into the main network, Layer 1, within a year. Simply put, ZK technology is like a magic that can prove the authenticity of a transaction without exposing any sensitive details. This will fundamentally solve the two major problems of expansion and privacy that Ethereum has long faced, and is a key step towards its vision of a global settlement layer. However, not all fields are triumphant. The previously popular liquidity repledge track has bad news today. A repledge platform called Inception announced its closure due to failure to find a sustainable business model. This was only 2 days after the leading project in the track, Eigenlayer, announced a 25% layoff. The above information shows that Ethereum is undergoing a profound structural optimization. Its core protocol is becoming more and more powerful, and institutional capital is continuing to pour in. But the application layer built on it has begun to survive the fittest and squeeze out bubbles. For investors, this means that the certainty of investing in Ethereum itself is increasing, while the risks and professional requirements of investing in specific applications within its ecosystem are increasing. Let's take a look at other mainstream currencies and market hotspots. The narrative of corporate vaults is also being played out in Solana. Consumer goods manufacturer Upexi plans to raise $200 million to double its SOL holdings to 1.65 million. This proves that the market is configuring SOL as a core asset alongside BTC and ETH. The decentralized exchange GMX was hacked this week, with losses exceeding $40 million. But in the past, such incidents were enough to cause market panic. This time, the project team offered a $5 million white hat bounty to the hacker through an on-chain call. The hacker accepted the offer and began to return the funds today. The price of GMX tokens rose by 14%. This event marks that the DeFi field is maturing, and the market has stronger resilience and self-healing capabilities. Finally, let's take a look at the progress in regulation. A clear and stable regulatory environment is a necessary condition for the market to mature. The U.S. House of Representatives will review 2 key crypto bills next week, involving market structure and stablecoins. This indicates that a national regulatory framework is accelerating. Stablecoin giant Tether announced that it will stop supporting USDT on 5 old public chains including Algorand and Omni. This is a manifestation of companies actively optimizing compliance and operational efficiency in the context of increasingly clear regulation. At the same time, the game between industry giants and regulators continues. Grayscale is pressuring the SEC on the conversion of its multi-currency trust fund to ETF, while Coinbase directly sued the Oregon government over regulatory policy issues. These seem to be conflicts, but in fact they are the only way to push the rules towards clarity. In short, today's market paints a grand picture for us. Bitcoin is becoming a real macro asset with the support of enterprises and institutions. Ethereum is undergoing profound technological evolution and ecological reshuffle. The regulatory framework of the entire industry is also moving from chaos to order. There are both opportunities and challenges, but for long-term investors, the foundation of the market is becoming more solid than ever. That's all for today. Thank you for your company.